The biggest tariffs imposed on European industry and agriculture are not coming from the United States, are coming from the European Union itself. In fact, the biggest burdens on trade are coming from a European Union that disguises its protectionism under the umbrella of so-called environmental measures, of fiscal measures, and regulatory burdens. Interestingly, at the same time, the European Union subsidizes North Africa and Middle East industries while it imposes enormous and growing barriers to its own industry. When we talk about tariffs, we need to understand that the European Union is not a champion of free trade, not at all. If we look at the automotive industry, the level of trade-weighted average tariffs imposed by the European Union on the US is much higher than that of the United States. In fact, it is so elevated that it's almost impossible to find imported US vehicles in the European Union. That in itself is an enormous trade barrier and shows that the European Union is not a champion of free trade, it is actually a champion of protectionism. Particularly damaging is to see the enormous tariffs imposed by the European Union on the agriculture sector of the United States. It is brutal. So high that it makes it impossible for U.S. farmers and for U.S. agriculture industries to export to the European Union. That is protectionism as well. Once we put all the tariffs together, what we see in this particular graph, courtesy of Bloomberg Economics, is that the European Union effective tariffs on the US are much larger on the vast majority of products. The effective tariff imposed on US companies is much higher in almost every product, from inorganic chemicals to meat and fish to flour, carpets, fertilizer, silk, second-hand clothing, all types of products. The European Union is not a champion of free trade. The European Union is a champion of protectionism. The European Union needs to change because the biggest tariffs that the European industries suffer come directly from the misguided energy, regulatory, fiscal, and industrial policies of the European Commission. VAT is a hidden tariff. The CO2 tax is also a hidden tariff. But in this program, we have only talked about the explicit tariffs. We didn't talk about the ones that are hidden. The European Union needs to change. The European Union needs to lower its own tariffs and its own protectionism, and everybody will win with it. United States inflation is rising. Inflation is rising because government spending was out of control, up 10% in 2024, and money supply growth is at 27-month high, not because of tariffs. Tariffs do not cause inflation. Tariffs do not mean more units of currency in the system. U.S. economy is not as strong as it looks, and it's definitely bloated by an absolutely unprecedented level of government deficit coming from much higher government spending and very aggressive fiscal policies that have disguised a much weaker productive economy than before. Monetary destruction continues, and Bitcoin is also reflecting it. Bitcoin is stabilizing above $97,000, and Bitcoin is showing that it is gradually going from the process of being a startup currency, a 15-year-old currency, to a really reserve of value, unit of measure, and mean of payment type of asset. It is creating its own liquidity. That's why it stabilizes and has lower volatility than in previous occasions. Gold's strength is discounting the level of monetary insanity that we are living all over the world. Therefore, what we need to think of is what is going to happen in the next years. When we look at those commitments, financial commitments that have not been financed yet by governments, what we can understand is that there will be much more money supply growth, significantly higher levels of debt, and more government spending. With all those factors, what we see is that there will also be a very aggressive reduction in the purchasing power of the currencies. And with it, gold is reflecting the reality of that monetary destruction. Fewer rate cuts because of persistent inflation. Persistent inflation is not a coincidence, it's a policy. The Fed has been exceedingly optimistic about inflation. It panicked in June and delayed the normalization of the balance sheet. It panicked in September with its rate cuts. And now inflation is persistent because government spending leads money supply growth, which leads to money velocity increasing, and which brings persistent inflation. And here we are with lower rate cuts. Therefore, families and businesses are going to suffer two ways. Number one, higher inflation. Number two, at the same time, higher rates. This is insanity. The Fed needs to stop disguising government inefficiencies and government insolvency. Thank you for watching this video. Please subscribe to my channel, like my videos, leave your comments below, and keep defending freedom. Thank you very much.